All right, everybody, welcome back to the deep dive.
Yeah.
Today we are going to be taking a look at Williams Sonoma.
Sounds good.
They just had their recent earnings call, and we're going to go through all of it and break it all down for you.
Absolutely.
So to kick things off, let's just do a little overview of how they did.
Yeah.
So right off the bat,
Yeah.
you should know that it was a pretty positive report.
Yes.
They exceeded expectations for both the fourth quarter and the full fiscal year of 2024.
That's right.
So they definitely had a strong finish to the year.
Yes, they did.
Which is pretty impressive considering, we're kind of in a weird economic environment right now. So
There's a lot of uncertainty out there.
So to get into a little bit more in the fourth quarter, comparable sales were up 3.1%.
Yeah, that's a big jump.
Which is a notable turnaround after several quarters of negative comps.
That's right.
And not only that, but they outperformed the industry decline.
They really did. A lot of retailers out there having a tough time with this economy. And so to see them pull off that kind of performance, I think that's really notable and says something about the strength of their business.
Yeah, it definitely points to them executing on their strategy more effectively than their competition.
It seems like it.
So on top of that, their operating margin in Q4 hit a record 21.5%, and earnings per share reached 3.28.
Yeah, they crushed it.
So
those are some strong numbers.
Now, it wasn't just a good quarter. The entire year had some pretty positive results as well.
Yeah, absolutely.
They reached a record annual operating margin of 17.9%.
Wow.
And earnings per share of 8.50 for the full year.
That's fantastic.
And not only did they hit those numbers, but they actually met their raised guidance.
That's right.
And beat Wall Street estimates.
Yeah, analysts were definitely impressed.
So now looking at the full year results, though, there was a slight decrease in comparable sales. So how do we reconcile that with the good news we've been talking about?
Right. Well, the full year saw a 1.6% dip in comparable sales, but it's crucial to look at the longer term trend.
Okay.
Over the past 5 years, they've seen a 34% increase in comparable sales.
Wow.
So while there may have been some, bumps in the road, the overall trajectory is definitely positive.
Okay, so they're still on a solid growth path over the long term.
Absolutely.
Okay, so now moving on to the future.
Yeah.
What kind of guidance are they giving for fiscal year 2025?
Well, they're projecting comparable sales to be anywhere from flat to up 3%.
Okay.
And an operating margin between 17.4 and 17.8%.
Okay.
So they're being cautiously optimistic.
Yeah, it sounds like they're aware of the uncertain economic climate, but still confident in their ability to perform.
Yes, exactly.
Okay, so they had a really strong finish to 2024, and it looks like they're well positioned for 2025.
Definitely.
But let's dive a little deeper into that strong Q4 performance.
Okay.
What were the main drivers there?
Well, a few things really contributed to their success.
Okay.
First, they had a really strong seasonal product assortment. They had all the right stuff for the holidays, and that really resonated with consumers.
Okay.
And then their collaborations also played a significant role. They had some big names like Monique Lhuillier with Pottery Barn and Stanley Tucci at Williams Sonoma.
Yeah.
And, these partnerships create a lot of buzz.
Yeah, it seems like every time I open Instagram, there's a new Williams Sonoma collaboration with somebody.
Yeah, and it's a smart move. They're able to tap into new audiences and offer unique products that people really want.
Yeah, and do we know how big of an impact these collaborations actually have on sales?
It's hard to say exactly how much they drive sales, but the company definitely highlights them in their earnings call. So it seems like they see them as a big part of their success.
Okay. Wow.
And then another factor was their furniture sales actually improved in the fourth quarter, which had been a bit of a trouble spot in previous periods.
Oh, okay. That's good to hear.
Yeah. And importantly, both their retail stores and their online platforms performed well. So, the omnichannel strength is really important in today's retail landscape.
Yeah, for sure. Customers want to be able to shop seamlessly wherever they are.
Exactly.
So it sounds like it wasn't just about the products and the partnerships. Their internal operations were really humming too.
You got it. The strength of their operating model was definitely a factor.
Yep.
They were very efficient with their supply chain, focused on full price selling, and controlled their costs really well.
So they're not just relying on discounts and promotions to drive sales.
Exactly. They're maintaining their margins.
Okay, so beyond just a good quarter, what are the long-term strategies that Williams Sonoma is using to drive growth in 2025 and beyond?
Well, one of their key strategies is to focus on core brand growth. Just keep
Yeah.
growing their existing brands through new product introductions and innovation. They really emphasize their in-house design teams and vertical sourcing.
So they control a lot of the process from the design to the manufacturing?
Exactly. That allows them to maintain high quality standards while also offering products at competitive prices.
Okay, that makes a lot of sense. And I know they also mentioned being mindful of the housing market.
Yeah, they recognize that the housing market can be unpredictable, so they're increasing their focus on non-furniture items.
Like what kind of things?
Things like seasonal decorations, textiles, kitchenware, home accessories, that sort of thing.
Okay.
The idea is that even if people aren't buying new furniture, they're still going to want to refresh their homes with smaller items.
Yeah, that's a good point. People still want to make their homes feel nice, even if they're not doing major renovations.
Right.
And it sounds like those collaborations are going to be a key part of their growth strategy going forward.
Absolutely. They see them as a really important tool to attract new customers.
Okay. And they also mentioned strong growth in their B2B segment.
Oh, yeah. Their B2B business is booming. It actually surpassed $1 billion in revenue
Wow.
and saw a 10% comparable sales increase in the fourth quarter.
That's huge.
Yeah, they're leveraging their design capabilities and commercial grade products to secure projects in the hospitality and commercial real estate industries.
Okay, so they're not just focused on individual consumers anymore.
Right, they're expanding into new markets.
And what about their newer emerging brands?
Yeah, they have a few brands that they're really excited about.
Okay.
Rejuvenation is a standout performer. It's consistently delivering double-digit growth.
Wow.
And their goal is to make it their next billion-dollar brand.
Okay, so they're looking at a pretty bright future.
Yeah, they are. And they also mention Greenrow Williams Sonoma Home and Mark and Graham as key parts of their growth strategy.
So they're not putting all their eggs in one basket.
Exactly.
Okay, now let's talk about the customer experience.
Okay.
What are they doing to improve that?
Well, they're investing a lot in enhancing both their online and in-store experiences.
Okay.
They're upgrading their design services with new digital tools like the Shop by Style feature.
Okay.
And they're also incorporating AI into their operations.
AI, that's interesting. How are they using that?
In a few ways, actually, they're using it for things like personalized email marketing, customizing website content for individual users, and even optimizing their sales processes.
So they're really embracing technology to improve efficiency.
Definitely. They even said they expect AI to help them manage their headcount in 2025.
Wow. So they're using it to streamline their workforce.
Yeah, they're looking for ways to leverage technology to be more productive.
Yep. We talked about online and AI. What about the in-store experience?
Right. They're also focused on improving the in-store experience.
Okay.
Their in-store performance actually improved, and they attribute that to better product displays, improved inventory management, and enhanced design services.
So they're making their stores more engaging.
Exactly. They want them to be destinations for design inspiration.
That makes sense. And of course, we can't forget about the behind-the-scenes operations like supply chain and customer service.
Right. Those are crucial for any retailer.
Yeah, absolutely. So how are they doing in those areas?
They're continuing to optimize their supply chain to make it more efficient and cost-effective.
Okay.
Their new distribution center in Arizona is a big part of that. And they're also committed to providing excellent customer service. They want to make sure orders are perfect, delivered on time, and damage-free.
So they're really focusing on the whole customer journey.
Exactly. They want to create a positive experience from start to finish.
All right, so we talked about the big picture strategies now. Let's take a look at the individual brand performance,
Okay.
starting with Pottery Barn.
All right.
Their comparable sales were down slightly, but they noted it as a significant improvement.
Yeah, they were down 0.5%, but that's actually a lot better than they were doing in previous quarters.
Okay, so are they turning things around?
It seems like their key areas of focus for 2025 include new product introductions, expanding their collaborations with brands like Love Shack Fancy,
Okay.
growing their outdoor furniture offerings, and leveraging their domestic upholstery capabilities.
So they're investing in their core strengths.
Okay.
Okay, now how did Pottery Barn kids and teens do?
They actually did pretty well. They had a 3.5% comparable sales increase.
Now that's solid.
Yeah, their dorm room and baby products were really strong, and they had successful collaborations with brands like Love Shack Fancy, Chris Loves Julia, and Rifle Paper.
Okay, so they're really hitting those key demographics.
Yes, they are.
All right, and West Elm also had a strong quarter.
Their comparable sales were up 4.2%.
Okay.
They had a lot of success with their new holiday product offerings in furniture, textiles, decorative accessories, and tabletop items, and their lighting category also performed well.
So they're really firing on all cylinders.
It seems like it.
And what about the flagship brand Williams Sonoma?
Williams Sonoma had a very strong quarter. Their comparable sales were up 5.7%.
Wow, that's impressive.
Yeah. They attributed their success to strong retail execution, product innovation, dynamic marketing, and collaborations with chefs like Morimoto.
Oh, wow, that's cool. So they're really tapping into the foodie market.
Yeah, they're offering unique experiences and products that appeal to that audience.
Okay, now we've already touched on the B2B segment, but it's worth mentioning again because of its strong growth.
Absolutely. Their B2B business is a major growth driver for them. They had a 10% comparable sales increase in the fourth quarter and exceeded $1 billion in revenue.
That's incredible.
Yeah, it's a significant part of their business now.
And Rejuvenation continues to be a standout performer.
Yes, they maintain their double-digit growth in the fourth quarter.
Wow.
Which is really impressive, and they're planning to open new stores.
So they're definitely confident in the brand's potential.
Yeah, they see a lot of opportunity for growth.
And what about Williams Sonoma Home? How do they do?
They noted some positive developments. They're expanding their product offerings in lighting, textiles, and accessories, and they're really focused on creating unique designs.
So they're trying to stand out in the high-end market.
Exactly.
All right, and finally, what about their international business?
Their global operations continue to be strong. They're focused on providing a great customer experience, offering inspiring products, and building partnerships.
Okay, so they're taking a localized approach to each market.
Exactly.
All right, now let's get into the financial details a little bit.
Okay.
So for Q4, what were their key financial figures?
Well, their net revenues for the fourth quarter reached $2.5 billion.
Okay.
That was a 3.1% increase in comparable sales.
Okay.
But it's important to note that the fourth quarter of 2024 had an extra week.
Okay, yeah, that definitely would have impacted their numbers.
It contributed about 510 basis points to revenue growth.
Okay, and what about their profitability for the quarter?
Their gross margin for the quarter was 47.3%,
Okay.
which is up 130 basis points year over year.
Okay, so they're becoming more profitable.
Yes. And their SG&A expenses as a percentage of revenues were actually slightly lower year over year.
Okay, and what were the key highlights for the full fiscal year?
For the full year, their net revenues totaled $7.7 billion.
Wow.
Which again includes that extra week.
Yeah.
Their full year gross margin was 46.5%, which is a really nice improvement.
That's a big jump.
And their SG&A expenses as a percentage of revenues were up slightly for the year.
Okay, so they had a really good year overall.
Yeah, they did.
And it sounds like they're in a strong financial position.
Definitely. They ended the year with $1.2 billion in cash.
Wow.
And no debt.
That's fantastic.
And their inventory levels were up a little bit, but that was partly due to pulling forward some shipments from China because of tariff concerns.
Okay, so they're being proactive.
Yeah, they're trying to get ahead of any potential issues.
All right, now let's talk about shareholder returns. How are they doing in that area?
They're very focused on returning value to shareholders. In 2024, they returned $1.1 billion to shareholders through share buybacks and dividends.
Wow, that's a lot of money.
Yeah, they also announced a 16% increase in their dividend for 2025.
Okay, so they're rewarding their investors.
Yes, they are.
And what about their capital expenditures? What are they planning for 2025?
Their capital expenditure plan for fiscal year 2025 is between $275 and $300 million. And most of that is going to be spent on things like e-commerce, retail optimization, and supply chain improvements.
So they're continuing to invest in their growth.
Exactly.
And what are their long-term financial goals?
They're aiming for mid to high single-digit revenue growth.
Okay.
And operating margins in the mid to high teens.
So they're setting some ambitious but achievable targets.
Yeah, they seem confident in their ability to achieve those goals.
Now let's talk about tariffs, because I know that's a big issue for a lot of companies these days.
Yeah, it's a big concern.
So how is Williams Sonoma addressing that?
Well, their guidance for fiscal year 2025 already takes into account the current tariffs on goods from China, Mexico, Canada, steel, and aluminum.
Okay, so they're factoring that in.
Yeah, they're not assuming any major changes to the macroeconomic environment or the housing market either.
So they're being pretty conservative in their outlook.
Yes, I would say so.
And how are tariffs going to impact their profitability?
Well, they do expect some gross margin erosion in 2025 due to tariffs. but they're planning to offset that through supply chain efficiencies and SG&A savings.
Okay, so they're trying to mitigate the impact.
Yeah, they're looking for ways to reduce costs and improve efficiency.
And what about their sourcing strategy? Are they making any changes there?
Yeah, they're definitely working to diversify their sourcing.
Okay.
They've actually reduced their reliance on China quite a bit since 2018.
Right.
And they're looking for lower-cost, non-tariffed countries to source from.
Okay, so they're adapting to the changing global trade environment.
Exactly.
Okay, so we've covered a lot of ground here.
Yeah.
What are the key takeaways for investors?
Well, I think one of the biggest takeaways is that Williams Sonoma is showing positive momentum even in a challenging economic environment.
Okay.
Their return to positive comparable sales growth in the fourth quarter is a good sign.
Yeah, that definitely suggests that they're doing something right.
And their focus on non-furniture categories gives them some protection against any potential weakness in the housing market.
Yeah, that's a smart move.
And their B2B segment and emerging brands like Rejuvenation offer significant growth opportunities.
Yeah, those are definitely areas to watch.
And their proactive approach to tariffs shows that they're adaptable and strategic.
Yeah, they're not just sitting back and waiting for things to happen.
And their commitment to shareholder returns is also a positive for investors.
Yeah, for sure. So overall, it seems like Williams Sonoma is well positioned for continued success.
I would agree with that.
Okay, so now for our This Is Not Financial Advice segment.
That's right.
Where we come up with a crazy but maybe plausible trade idea
Okay.
based on what we've learned. So what do you have for us today?
Okay, so we talked about Williams Sonoma's push into the B2B market, right?
Yeah.
And they mentioned securing their first furniture order for a cruise ship.
Right, Royal Caribbean's Utopia of the Seas.
Exactly. So here's an idea.
Okay.
What if you went long Williams Sonoma
Okay.
and short a publicly traded cruise line operator that hasn't really focused on high-quality, design-forward outfitting for their ships?
Okay, I see where you're going with this.
Yeah, the idea is that Williams Sonoma is going to benefit from this growing B2B market,
Okay.
especially in the cruise industry.
Yeah.
While the cruise line that's not investing in these kinds of partnerships
Right.
might fall behind.
Okay, so it's a bet on Williams Sonoma's strategic diversification
Exactly.
and maybe a little bit of a bet against the cruise industry's ability to adapt.
Yeah, potentially.
Okay, well, that's definitely an interesting idea.
Yeah, it's a little out there, but who knows?
Yeah, you never know.
It could be a good trade.
All right, well, that brings us to the end of our deep dive into the Williams Sonoma earnings call.
Yeah.
We've covered their strong performance, their key strategies, and some potential opportunities for investors.
And a crazy trade idea.
A crazy trade idea.
Of course.
So what stood out to you the most from this report?
Well, I was really impressed by their strong Q4 results,
Yeah.
especially their return to positive comparable sales growth.
Yeah, that was definitely a highlight.
Yeah. And I'm also interested to see how their B2B segment and emerging brands perform in the coming year.
Yeah, those are definitely areas to keep an eye on.
And of course, I'll be watching to see how they navigate the challenges of tariffs.
Yeah, that's a big one.
But overall, I think Williams Sonoma is in a good position.
Yeah, I agree. They seem to have a solid plan for the future.
Definitely.
All right, that's all the time we have for today.
Okay.
Be sure to check out our next episode for another deep dive into world of earnings calls.
We'll see you then.
All right, thanks for listening, everybody.
Bye.